smokers, and this ain't no joke. Kraft Heinz Corporation is down over 27% today, and this is shocking for two reasons. One, this is one of Warren Buffett's main investments, and the fact that one of Warren Buffett's main investments would be down 27% on a day is shocking. Second, Kraft Heinz is a massive food conglomerate. This is like a type of move you'd expect in like some speculative like tech stock or something like that. A down 27% move, okay? First, I want to read you through kind of the story here, and then I want to give my opinion on this, and I have a lot of opinions on this, okay? Warren Buffett's Berkshire Hathaway lost more than $4 billion in a single day after shares of Kraft Heinz, one of the investor's largest holdings, plunged on a slew of bad news, including a dividend cut and a government investigation. Stock of the packaged food giant, whose products include Heinz tomato ketchup, Jell-O, Kraft macaroni and cheese, plunged more than 28% on Friday, and for Berkshire, which owned around 325 million shares at the end of 2018, the losses are steep. At current levels, Berkshire Hathaway is down $4.4 billion on paper as of Friday's session alone. Kraft is Berkshire's sixth largest holdings behind Apple, a few banks, and Coca-Cola. This chart will show you here that basically Kraft Heinz is one of their biggest investments out there, and it just has gotten absolutely obliterated. So as far as the numbers go, Kraft Heinz reported earnings of 84 cents a share in the fourth quarter, thanks to a write-down of assets down 6.7% from a year ago. It posted fourth quarter revenues of $6.89 billion. Both metrics fell short of analyst expectations. The company also said the SEC issued the company a subpoena in October as part of an investigation into the procurement of accounting policies, okay? Holy smokers, that's a little scary right there. That's the scariest thing of all this, okay? Kraft Heinz said it launched an internal investigation into the matter after receiving the subpoena. Following the investigation, Kraft Heinz said it posted $25 million increase to the cost of products sold after determining it was immaterial to the fourth quarter of 2018 and previously reported 2018 and 2017 interim on a year-in-date period. So first off, I have a lot of opinions on this whole situation, this massive stock crash for Kraft Heinz, okay? The first one being, obviously Warren Buffett's one of the most respected investors of all time, okay? On the Mount Rushmore of great investors, Warren Buffett's gonna be right there. He is right there. He's probably the best ever, okay? But the fact is, everyone takes L's in this game, and you have to accept that, all right? So unrealistic to expect that you're going to invest for decades and decades and decades and not have a few big mistakes here and there or minor mistakes here and there. Everyone makes mistakes in investing. Sometimes people might laugh at somebody that makes a mistake in an investment or something, and I'm just going to tell you, like, everyone who invests money will make a mistake. Everybody who's in business in general, every once in a while, if you're doing this for decades and decades, you're gonna make mistakes. It's just what happens. The key is to win a lot more than you take L's, all right? Warren Buffett at the end of the day has already won the Super Bowl 1,000,000 times, all right? And the fact that he loses one Super Bowl doesn't necessarily take away from his greatness. It just shows you that you've got to understand sometimes you're going to take L's in this game. It's just the way it goes, and you have to accept that as a stock market investor or someone in business in general. You just have to accept that is a fact, because you will take L's in this game, and also you have to get over it mentally. Like, if you make a mistake, like, get over it, okay? Because it's something you shouldn't hold yourself back for. Oh, I made a mistake, I can't invest, blah, 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 I stink at investing or something like that because you made a mistake. Like, just get over it, man. Get over it, move on to the next one, learn what happened in that last one, and move on, okay? Next thing I want to point out here, so Heinz, Kraft, they own a ton of brands, okay? A massive Goliath company, like you could look at their brands there. They own, just about anything you could possibly think of. Maxwell House and Planters and Philadelphia cream cheese, Oscar Mayer, A1, I mean, obviously Kraft cheeses, Claussen pickles. I mean, look at the amount of brands they own. Obviously Heinz ketchup and all those type of brands, right? Now, there's a very scary chart I'm about to show you, okay? This chart is one of the reasons, in my opinion, one of the sole reasons why Kraft Heinz has started to fall off in a major way, okay? This is one of the reasons. Look at this chart here. This shows Kraft Heinz Company advertising spending in the United States from 2014 to 2017. We don't have the 2018 numbers in yet, but they could be down once again year over year. But look at this. In 2014, this was a company spending over $600 million on advertising in the United States. And you go up to 2017, and that number has fallen by over $150 million, over $160 million they have cut back on advertising, okay? Let's think about that from a perspective. You're talking about all these legacy brands that have always had a ton of advertising spend behind them, which has helped make them the most popular products in food stores across all the United States, right? And all of a sudden you say, well, you know what? Let's start cutting back each and every year on our advertising spending. And what ends up happening is as the years go on, you keep decreasing the advertising spending, your brands become a little less significant as they were in the prior years. And it does help out profitability in the short term because you're spending less on advertising. Guess what? That money can just go back down to net income. But your brands get a little less relevant each and every year when you've got brands that were built on the backs of advertising for decades and decades. I remember being a little kid, my mom would be watching soap operas, and when the commercials came on, guess what? You know, a ton of that company's products were always shown on the commercials. My mom was watching those soap operas on the TV, right? And then guess what? When we went to the food store, we ended up buying a lot of those brands. That's just the way it was, right? And so all of a sudden you start cutting back your advertising, and then your brand gets a little less relevant by the day, okay? Also, the lion's share of the advertising spend for Kraft Heinz is still spent on traditional media, okay? Television, newspapers, billboards, and these type of things, direct mail. And these are the things that made Kraft Heinz into this Goliath company that could buy other brands and had all this money and just spit out money in dividends and blah, 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 right? All that traditional advertising is what made them. But the issue is we're in a different landscape where traditional advertising, the spend just doesn't go nearly as far as it did 20 or 30 years ago, first off. And second, the spend you could do on other things, the new platforms, you can get so much more bang for your buck, okay? Where should Kraft Heinz really be advertising? They should be advertising on YouTube. Guess where people as attention actually is? YouTube. They should be spending mass amounts of money on Facebook. Guess where people spend a lot of time? Facebook. They should be spending mass amounts of advertising spend on Instagram. Instagram has the world's attention, and especially United States citizens, okay? Kraft Heinz has to ask themselves one very specific question, and this question is the answer to all their problems, okay? Where are the 20 to 45-year-olds? These are the people who end up buying your products in mass. Why? Because 20 to 45-year-olds are the ones that have kids, okay? And the ones that have kids and have a family in general, they're the ones that are always going to spend the most amount of money on grocery shopping, right? Because if you have a family of 4, you have a family of 5, you have a family of 6 or whatever, you have all these kids, you have a spouse to take care of, you're going to always be the one that spends the most money possible. Grocers are always trying to target those people that are in that 20 to 45-year-old age bracket, okay? And if you're not in front of their faces because you're spending still all your money on traditional advertising where the 20 and 45-year-olds aren't, guess what? Your advertising spend's not going nearly as far. You need to be spending money on Facebook, Instagram, YouTube, where people actually are. And Kraft Heinz is still spending massive amounts of money on traditional media when traditional media is dead. The people that still watch traditional media are the people that are maybe in their 50s and 60s and 70s and 80s. But guess what? Those folks, their kids have already grown up, okay? And those folks already are the ones that buy your product. You got to focus on the next generations because they're the ones that are going to dictate whether your business thrives or whether your business becomes less and less relevant over time. And one last thing I want to point out here, I'm surprised Warren Buffett bought this stock in the first place, not just because of all the other issues, but here's the main part, okay? Kraft Heinz has an absolutely awful balance sheet. This is one of the worst balance sheets you could possibly find, okay? Kraft Heinz company has about $1.3 billion just sitting around in cash, okay? They have no short-term investments. They have no long-term investments. But we go ahead and look down at their long-term debt, and this is a company that has nearly $31 billion in long-term debt. 31 billion. So they got 1.3 billion in cash and they got 31 billion in long-term debt. That is awful, okay? That's an awful ratio. It's one of the worst I've seen in quite a while, especially for a bigger type company. That's horrible, all right? So I'm very surprised with all these issues. Warren Buffett ended up buying the stock in the first place, and now they're down over $4 billion. Who knows? Maybe someday they'll be able to eke out a profit, but as of right now, it's not looking good. And if you're a new investor kind of looking into that stock, and you're looking into a company, you're like, dang, they got $31 billion in long-term in debt. Imagine the interest payments they're gonna have to make on all that debt over time. Do I really want to buy something like that. When I looked into it, I'm like, I wouldn't touch it just for the balance sheet alone. Never mind the issues with still spending way too much on traditional media. Never mind the fact that they've been cutting back advertising spending and all those bad things, right? You just look at that balance sheet and it's like, why would I want to buy a company that has $31 billion in long-term debt? Like, that's mind-blowing, guys. Anyways, I want to know your opinion down there in that comment section. As always, thank you for watching and have a great day.